Good afternoon, everybody. A very warm welcome on behalf of Sathi Development Services to all of you who have joined this session. This is session number 7 of our course. It's an 8-week series, and we are at the fag end of our course. So let's begin with our session on GST. It is important that not-for-profits understand GST, okay? And this is not something that we don't need to know. However, we need to know both as, service providers or as grant implementers, as well as purchasers of goods and services. So what is it that we need to know? I'm not going to take you into the minutest detail of the GST law, but will like to make you understand the broad, and that's why I've called this session the overview of GST. So the first thing is key definitions and applicability of GST for not-for-profits. This is the critical piece. What is our understanding of the applicability of the GST law for not-for-profits? It's important to know that. It's important then to decide how documentation has to be done, what we need to understand so that we don't finally end up being covered under GST, but not knowing that this was applicable to us. The second is the GST architecture. How does it work? Actually, the various parts of this, how do they work? The next one is on the GST returns. I'll like to share with you, people who have a GST will be aware of the GST returns, but we need to know, even if we are not registered under GST, how does the architecture work in terms of reporting, the other provisions in the GST law, and of course, what we need to do, even if we are not registered under GST as a not-for-profit. What are the 2-3 things that we need to do as purchasers of goods and services, and not get kind of carried away by any information that comes and we treat that as final. So when we purchase goods, do we need to understand what the taxpayers status is, what goods that we are purchasing, what is the code for that, and therefore the commensurate rate of taxation, or the rate of levy as it is called in GST, is what it is. So we need to be aware of this, even though we are not registered, and you do not need a registration, you do not need a login credentials for knowing all this. You can, but for the interest of payments that you make to vendors, whether they are eligible, whether they are actually really registered or not, whether they are in the business of those goods or services or not, all that is something that we need to know. Okay, is something that we will also study. So I come to the key definitions of GST, just as a for the starting of this session. And again, I want to tell you, the idea for this session is for the not-for-profits to understand the law, okay, the GST law. Where does it, what we need to know so that we are careful when we are either doing business, or whether we are doing business with people and purchasing goods and services. That's what on both sides. So as far as key definitions are concerned, when it comes to the definition of person, a society or a trust is a person. We are into business as well, because the law says that whether any trade, commerce, manufacture, anything, whether or not for benefit, pecuniary means money and benefit means profit, whether it's for profit or not, the money part, that's business. So to that extent, again, we are covered. The third is what is called as consideration. Now, consideration means monetary payment in very layman language, and especially concerning the subsection 228 of section 2. But not to confuse you, so I'm not talking of sections. What I'm trying to explain to you is, as we move on from now to whether it is applicable to NGOs, is what the story is. Now, as far as consideration is concerned, please remember that mere payment for monetary payment for something is not consideration. There has to be another element, which means that there has to be something in return. Now, when we operate as not for profits, there's nothing in return. If you sit back and start thinking, what do we get in return for benefiting the beneficiary or the community? We don't get anything. Actually, we don't expect anything from them. So the point is, while there is a contract, or while there is a, there is a reason for money coming to us under a contract from a donor, but there's nothing in return that we get as implementing agencies or the donor gets, in terms of, unless, if it gets, then it is consideration, but if it is not, which is generally the case, then it is not necessarily consideration. Now, the most important point here is what is called as supply. What is the definition of supply or taxable supply in GST? There are three parts to this particular word supply. One is supply of goods and services. Now, uh, you know, or both. Okay, so you have sale, you have transfer, you have barter, you have exchange. All that is what is said as the first part of what taxable supply is under GST, and therefore it is supply of goods and services. Now, goods and services you will supply to identified persons. One person is a purchaser and one is a seller. They are identified. However, when it comes to voluntary contributions, I am talking specifically of grants, which are not considered as supply of goods and services, because there is no specified beneficiary. There is no specified beneficiary. Now, please remember, when I'm talking about all this, I'm saying no specified beneficiaries. But if there were specified beneficiaries, then the color will change. But generally, when grants or contracts are given to us as grant contracts. Now I'm talking of grant contracts. Contracts can be service contracts also. Okay, that's where the difference is. And therefore, when you take CSR money, you have to be very careful whether the contract, in terms of the nature of the contract, is a grant contract or a service contract. And you have to be very careful in taking a grant contract and not a service contract. Okay, because a service contract has gives an indication that there is a give and take relationship, which is what we will see here as in terms of consideration. There is a supply of money, but there is also this contract is linked to a beneficiary or linked to any implementing partner getting any benefit or a donor. So it's very important to understand that consideration will come into play as a component in supply if there is anything in return that you get from the beneficiaries, if there's anything in return that the implementing partner gets from the donor, or the donor gets either from the implementing partners or the community at large. Unless there is a reverse flow of any kind of return, then the word consideration will not come into play. And the third is what is called as furtherance of business. Now, not for profits are not into business because they work on grants, and grants are not their income. Strictly speaking, grant is not an income. Okay, because a grant is a liability. Once the liability is discharged, it becomes income, okay, for the sake of presentation in our income and expenditure account. However, we can even present the grant solely from the balance sheet, okay, from the asset side and the liability side. But in the hybrid model of presentation that we have for not-for-profits, again, as a recommendation from the ICAI in the technical guide, is that unutilized grants be treated as liability, receivable grants be treated as an asset, but all utilized grants may be routed through the IND. Now, what IN is statement. Okay, so I hope you're understanding what I'm saying. Now, there is nothing like business or furtherance of business. Now, if these three things are not covered, are not what that transaction is, okay, then it will not be covered in the definition of supply. Now, you have to be very clear as to what is the scope of supply, and you'll have to, run these three tests in a certain way, or three parameters, to see whether it is cutting into the scope of supply. That's the first point that we have to remember as a not for profit, because that is what is the definition of supply in the GST law. So you'll have to understand this. Okay, now, therefore, the nature of the contract, the way the contract is defined, the relationship in terms of give and take has been defined. How 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 much is there a component of furtherance of business, how much there is a component of consideration, and how much is there a component of supply of goods and services. Now, this has to be understood for that transaction to be clearly identified as taxable or supply under GST or not. So generally, grant contracts, if they are in the nature of grant contracts with no beneficiaries and nothing in return, will not be in the scope of supply. But we'll continue with this. So I just want to mention the definition of supply, okay, at this stage. But whether what is applicable as a GST to NGO is what we're going to see in the next slide. Now, the levy and collection. So the Act also says tax GST is leviable on supply of goods or services, or both, at the transaction value. Now, the transaction value is determined under a section, and the rates are prescribed under the various schedules. Okay, so what it means is that whatever will be the supply of goods and services, there will be a tax component or GST on the transaction value or the taxable amount. And that GST, the rates will be specified. The rates are specified. We have to be mindful that we understand the rates that we are paying, because the rates are different for different goods and services that we purchase. So we need to understand that we are paying the right rate of levy for purchase of goods and services. So these are some of the key definitions of the Act that I just wanted to tell you. Now comes to the critical aspect is of, are NGOs covered under GST or are NGOs exempt from GST? Now, there are three tests that we need to run to understand this. Okay. The first one is, are they covered under the exemption notification as a charitable activity? So the GST, when it was introduced in 2017, the 12 by 2017 notification was an exemption notification. It said these activities are outside the purview of GST. And I'm referring to the June 2017 exemption notification. Now, the exemption notification notified that charitable activity, if an organization is running, will be exempted from coverage of GST. Now, what is a charitable activity is defined here in GST in the notification. Okay. So right now, the charitable activity has nothing to do with 215 that we have seen as charitable objects. Okay. The definition of charitable activity is specific to the GST law in terms of its applicability for not-for-profits. Clearly understand that. As we had, what is CSR activity? What is, securities law activity that will be permitted? Similarly, activity which if you are doing will make you exempt from the applicability of GST. Now, when it comes to the exemption notification, the notification says that there are two things that need to be done. It's not just that you are a charitable act, you are doing charitable activity as defined in the notification, but you need to first also be a 12AA entity or a 12A entity. So the two conditions, and the condition is, and first, that your entity must be registered under section 12A, okay, which means that you are a 12AB entity. The second is that you must be doing charitable activity. Now, what the definition of charitable activity, we are going to see in the next slide. So that's the first test that you need to run. If you are a 12 a registered entity, and you also are covered under the definition of charitable activity as defined for purposes of exemption, you are an exempt entity. All right. And therefore, you might, when you are actually doing anything, you can definitely say that we are exempted under the exemption notification 12 by 2017. The second is deciding on whether the services are covered under the scope of supply. Okay, we have seen the scope of supply in the previous slide. Okay, so the second thing is, if you're not covered under the exemption notification, run the second test, which says, does this work get covered under the scope of supply? What does it mean? Supply of goods and services, okay, uh, for a consideration, and in terms of, and in the course of furtherance of business. These three tests, again, you will have to, pointers you'll have to address in terms of the second test. Okay, so we have seen what those three things are. If you were to look at a as not being exempt, and you were to look at a consultant contract, definitely you will fall, if not an exempt entity, but running the second test or the test B, you will be under the scope of supply. And the third thing, even if you are under the scope of supply, is that the aggregate value of, the threshold for the for registration or applicability, there is a threshold that has been given. Up to that threshold, you are not required to get yourself registered. So that aggregate value of goods and services threshold also you should know. So if I am not exempt under the exemption notification, and I am providing any service for a fee. Now remember, CSR contracts is services for a fee, although they are grant contracts, but the nature of the way they are, drafted, or the drafting of the contract and the use of language gives us an understanding that this is a give and take relationship. Whereas if you scratch the surface, it's a grant relationship. But then we have to be very careful. Suppose, however, if we were in the business, in any business for that matter, uh, you know, and we were providing any services by way of consulting services or by way of any kind of consultancy, then if we were doing consulting to the extent of, say, maybe 5 lakhs in a year, will we still be liable for registration? The answer is no, because you need to again see the aggregate turnover in for, if it crosses the threshold in terms of the goods and services. The goods threshold is 40 lakhs, for normal states, and 20 lakhs for specific special category states. As far as services are concerned, is something that we do more. The 20 lakhs is for services, and 40 10 lakhs for the special category states. So if you are a normal state, you can see your the states which are normal cat states and the special category states. So if you are into normal category states, up to 20 lakhs of services that are rendered, provided that you fail the test on A and B, you will still not be required to get registered. You may still not charge GST. Okay, so this slide gives you an idea as to what test needs to be, or what needs to be understood, or what precaution needs to be done to see whether you are covered under GST or not. However, for instance, if you were to get a contract and you were failing test number A and B, and you get a contract for 30 lakhs, you will have to get registered and charge GST and deposit that GST. Now, that may be a incidental business income. Please also remember, when I'm talking of a service contract, again, I'm not saying that it is a pure commercial contract unrelated to your objects. It's a contract which is related and is incidental to your objects, but it is a business transaction. So all those things you have to understand to be able to see the bigger picture of applicability of GST to NGOs. This is something that is very critical in terms of your day-to-day business, in terms of your contracting, in terms of your drafting of contracts and documents, so that you do not fall into this, a situation where you might be doing a grant in the, but in the nature of being treated as a service contract and finally end up with GST and TDS implications. Very important to see each and every of these contracts and say and be clear. If it's a grant contract, it has to be stated like a grant contract where the beneficiaries are amorphous. You really don't know who's the specified beneficiary. You are not getting anything in return because the grant just covers your cost. Okay, you might get an incidental admin overhead to cover other costs in your organization, but there's nothing like a profit, there's nothing like a gain that you are making, and this is not for furtherance of any business, because we are not into business. So typically, if you were a charitable organization registered under 12A and also fulfilling the definition of charitable activity, then you will be fairly safe. However, if that were not the case, then the other two tests will have to be run. Now, the question is, what is the definition of charitable activity? And it's very, very narrow. This definition of charitable activity is very narrow. It has only 4 clauses. Okay. Now, the first one is public health. So public health is not all public health. It's very narrow, very skewed in a certain sense. It says care or counseling of terminally ill persons, people with HIV or AIDS. Third is persons who are addicted to the dependence forming substance. And the fourth is, which is slightly broader, public awareness of preventive health, family planning, or prevention of HIV/AIDS. Preventive health is a fairly big, if you are into this area of health, preventive health can be preventive health in any area. So, but then that is public awareness. Okay. And it could also be care, because care or counseling is what is mentioned. But again, you will see that when it comes to public health, the except for B, which is demand generation activities or awareness generation activities around preventive health, which is awareness, of course, because all awareness will be preventive health. Okay, in a certain sense, again, family planning and HIV. But the care and counseling or counseling is a very restricted interpretation, and one has to understand. The second one is religion, spirituality, or yoga. So if you are into religious activities, definitely you are very much covered. However, when you do commercial activities under religion, then beyond certain thresholds for renting out, for this and that, there are specific, the notifications clearly says what will get covered. So one has to be very clear that religion in terms of worship is and related activities is not under GST. But when you do anything which is incidental to religion in that premises, then there are triggers that will apply beyond a certain threshold. So if you have rooms, if you have a hall which you gave and things like that, is something that will then get triggered in terms of GST applicable beyond a certain threshold. The third one is advancement of educational programs, skill development. Okay. But then again, these educational programs or skill development programs are very restricted. Okay. They are very restricted. Abandoned, orphaned, or homeless children, physically, mentally abused. Third is prisoners. And fourth, of course, people who are above 65 years. Now, this is very, very narrow, restricted definition of educational programs or skill development programs. So one has to be very clear that our object and our activity is falling clearly under this charitable activity or not. And the fourth one is, of course, environment. So people, and this fourth one is more or less the same as 215, preservation of environment, including watershed, forest, and wildlife. So if you're doing as an organization anything for forests, anything for environment, and there are services that you are rendering, then definitely you are exempted because you are a 12A entity registered under 12AB and also falling under the exemption, mega exemption notification, okay, of 12 2017. Now this is what decides uh, the applicability or the coverage of an NGO in the definition of GST. Now, this is to the extent that I can tell you at this point of time, because every situation might be different, but at least it starts making you think, when is GST going to get applicable, and what I need to do in terms of my documentation and contracts, that the work that I do does not fall into the definition of supply of goods and services. That's what you have to prevent. Now, the prevention is based on your three, the tests, as I said in the previous slide, and also how you have drafted all those documents and contracts, which should then not make you come within the fold of supply of goods and services. That's all that I can say at this stage. And it is for you to understand what this is. And there is a lot of interpretation issues that are there. But I have tried to kind of simplify this to the extent that at least this becomes your starting point to think. Generally, grant contracts, if they were set up as grant contracts and where you normally do not have any consideration mean anything in return, where the benefit is not to any particular person, where the beneficiaries are themselves not identifiable, definitely those contracts are not within the scope of supply. All right. So I move on now to, so this is something very, very important to know. And these three slides give you a clear picture as to what needs to be understood. However, even if you fall under this and you have incidental business, please remember educational institution by way of imparting education, medical institution by way of giving medical services are also exempt under GST, but they are not exempt under charitable definition, under the definition of charitable activity. They are exempted under serial number 66 and serial number 74 of this notification, but not covered under serial number 1 of the chapter 99. That's what I want to say. So that understanding also you have to have. There are this particular notification has a long list of what is exempted, which will also include educational institution, but you need to understand what educational institution they are saying is exempt, what medical institutions they are saying is exempt. That's not covered here. That's not covered in serial number 1 of chapter 99. It is covered under serial number 66 and 74, and that understanding has to be there. Okay. So that is something that we need to understand. Now we come to what is this GST in terms of, now I'm trying to explain to you broadly the architecture, after that broadly the reporting, and then of course again coming to what as purchasers of goods and services we as NGOs should be mindful of. Now, the GST, please remember GST, the goods and services tax is a consumption destination based consumption tax. What does the destination based consumption tax mean? It means that this tax belongs to the place where the goods and services are finally consumed. That is what is called the destination. So wherever the destination ends is where the particular tax becomes, where that particular state or central government, as the case may be, or the union territory, as the case may be, will be entitled for the benefit of that tax. That benefit will accrue to the consuming state, destination based consuming state. Okay, not the original state, the state where it originates, where the goods or services are consumed. That particular state will get benefit of that tax. Now, in normal parlance, we have two ways in which goods and services are being supplied. One is intrastate, where there is both component of CGST and SGST or UGST. U means Union Territory. Okay. So when there is intrastate sale of goods or supply of goods or services, which means intra means within a state or within a union territory, then both the CGST and the SGST will have to be applied. Both the center and the states have power to collect tax. Then that is what is mentioned here below in the image, in the illustration that is there. When there is an interstate supply of goods and services, which means the goods and services move from one state to another state, then there is only one tax that is applied, that is called IGST. So when you will see an invoice that comes to you, then you will have to see whether CGST, SGST is being levied on the taxable amount separately, or is it only one tax, which is the IGST? Okay, please remember that. Now, that is what will decide whether it is an intrastate sale or purchase or an interstate sale or purchase. When it is interstate, then only one tax will be applied, which is called integrated GST, which means it will have the component of SGST and CGST together because the central government is collecting it. So please remember that when you are purchasing any goods, you'll have to see whether it has got originated from your own state or whether it has got originated from another state, and that will decide the inter and the intrastate sale. Now, please remember that there is dual tax regime in this country based on the federal structure, which means that taxes can be levied, are levied, not can, are levied both by the center and the states as part of the federal structure of this country. That is why we call it dual tax regime. And you have seen in the previous slide, tax is collected by the central government and the state government. Both have to run their business. Therefore, they will have to collect taxes through the sale of goods and services. And that is why it's called dual tax regime. The second most important thing is what is called as one nation, one tax. GST is called as one nation, one tax, which means that in the entire country, all other ways which were there prior to 2017 have all got collapsed into one tax that's called GST. So before that, I don't want to get into that, but before 2017, when GST was introduced, there were a lot of taxes which were, state taxes, central government taxes, VAT, customs, all kinds of things there were. Okay. Now that has been done away with, and there is only one nation, one tax, which means that if you deposit tax once, at the time of making the sale or supply of goods and services, the credit of that tax is seamlessly transferred to the people to whom it has to go, whether it's to the central government, to the state government, to the persons who are buying or selling. It is seamless based on the GST network that has been created. That's why there is seamless credit flow for interstate supplies because it's a one nation, one tax. What does this mean? This means, suppose I am a seller, okay? So you would remember that GST is basically a value added tax. A value added tax means that at each stage of the value chain, only the amount of value that has been added will be taxable. That is what is called value added, and therefore it is called truly a value added tax. Now, that means that when I am exporting, suppose point number A that I'm reading, the seller of an exporting state, whatever he has purchased, he will add some value. Suppose he has purchased at 100 rupees and he wants to now sell it at 120 rupees. When he purchased it at 100 rupees, he had paid some GST. And Now at 120, he is required to pay some GST, okay, at the rate of say 18%, okay. Theoretically say 10%, or just theoretically. So 100 rupees when he purchased, he had paid 10 rupees. Now when he sells it at 120, what does he have to pay? He has to pay 12 rupees. Now he doesn't pay 12 rupees, and that's because it's a value added tax. What did he add? He added 20 rupees to the value of 100 rupees. So he will be liable to pay only the tax on the value addition that has happened. Understand this. Okay. So we are trying to understand the GST. As not for profits, it's not that you don't need to understand. You need to understand the basic framework of GST. Now, 20 rupees here, that particular person, when it is selling, exporting state means when he is doing a sale to another state. That is why it's an exporting importing state, because it's an interstate transaction. Now, when the exporting state dealer, okay, is in interstate sale, is making that transaction, then it is required to pay the 10% on 20 rupees only and not on 120 rupees, because for the 10 rupees that he has paid for purchases, that he will get as credit, that will be set off from the available credit of IGST or that he will have against that payment. So he had a credit of 10 rupees in his account, and his liability is to pay 12 rupees. So he will set off 10 rupees from that 12 rupees and pay only 2 rupees. That is what he has to pay to the government. And that is the value addition that he made. And on that value addition, he has to pay the value addition tax. Now the buyer, so he made the sale and he deposited. The buyer of the importing state, okay, when that buyer who is now purchased it at 120 rupees, that buyer is making again a sale, then whatever he paid as the tax while purchasing, that particular buyer will be able to set it off against the sale from the output tax. So they, when you purchase, you pay GST, it is called input tax. When you sell a product, the same product after value addition, that's called output tax. So the output tax will be paid net of the input tax, because of the value added nature of this particular tax. Okay, and this will continue till the time that the material gets consumed, because this is a business to business deal that happens, and the credit keeps on going on, and that is what is called the seamless flow of credit. There is no actual credit moving, but this is how the credit is moving, and the liability for payment of taxes is discharged through the VAT, or the value added tax. I hope you understand what I'm trying to say. And therefore, both the buyer and the seller have the benefit of setting off the input that they have against the output and pay the net tax that has to be paid. This needs to be understood. Now, whatever is the amount of taxes, so when when the seller, when the dealer of an exporting state is selling a good, then he is invoicing, and the money will come to the exporting state, because the money is going to come to the seller. There is an arrangement between the central government and the state government, where where this credit also gets settled between the state governments and the central government. And the central government, if it collects tax, it shares it with the states. Where the states collect it, they share it, the IGST component, with the center. So the arrangement is between the center and the state. The arrangement is also between the buyer and seller, based on how, at what rate they purchased and what rate they sold. They, both of them, have to have the liberty to take credit of whatever tax they paid, and only pay the tax on the value addition. Now this is something which is the critical part to GST, both from the point of view of the buyer seller, and also from the tax collector point of view. So the dual tax regime And the one nation, one tax seamless credit flow is what I'm referring to in this slide. Now, moving on to some other concepts here. What are the types of supply as far as GST is concerned? There are four categories. One is called exempt, essential, regular, and special. And there are different rates, as we will see. The rate of levy is different. Now, exempt, we have seen even charitable exempt. Okay, so the B part is what I'm saying. Supplies that are wholly or partially exempt through notification. Now, the notification might not fully exempt certain services or certain activities, as you might call it, or wholly or partially. Supplies taxable at nil rate, where there is nil rate of taxation. Supplies which are non-taxable because they are not covered under the GST Act. Okay, human alcohol for human consumption petrol, they are not still covered under GST. So this is what is called as exempt supply, which also includes exempt supply and exempted under the notification 12/2017. The second one is what is called as zero rated supply. So the rate of tax or GST will be zero, not nil. This applies to exports. So if you're exporting any service to a foreign, person, then that is what is covered under zero rated supply. So if I were to supply any service to a foreigner, okay, that will be a zero rated supply because it's an export. It's even supply made to a special economic zone is also zero rated. Now, if you were to make a supply which is an export of services, okay, export of services, we are saying, then where you can avail input tax credit, you will have to give a letter of undertaking on the portal saying that this is export of services and therefore zero rate of GST is being charged. Now, say I am an NGO and I am wanting to uh, you know give an export of services. I can export services at zero, or if I am a normal taxable person, then I can export services at zero rate, provided I say that these are export of services and the beneficiary is sitting outside of India. That's what is called zero rated. Composite supply means when you sell a particular product as as the two products being a bundle, one can work without, one cannot work without the other, is what is called bundling, or you cannot separate them. That's what is called composite supply. The other one is called mixed supply. Mixed supply means although they are separate, but they have been all put together as a sum total. So you may have a hamper where there are gifts and the gifts are of different items. Okay. And the gifts might have different rates of taxation. So whatever is the highest rate of taxation is what will be applied for the other parts of this mixed supply. As far as composite supply is concerned, whatever is the principal item in that composite supply in that bundle, whatever is the rate will apply for the other part, because the principal item or the primary item in the composite supply will drive the rate of taxation. Now, as far as the rates of levy is concerned, these are the rates of levy. 0% we have already seen, 5% for essential goods, 12 or 18 for standard, and 28% is the special goods. Now, there are other rates ranging from 3 to 0.25%. But generally, when we talk of, rates of GST is when we talk of 12 or 18, and for special goods, 28%. Now, what goods fall in 12, what is in 18, what is 28 is something that we need to know, that when we are making that payment to that particular person, is that rate the right rate? That is what is the most important thing. And for that product, is that the rate? And we will see that. So it's not just I don't need to know about GST. You are a purchaser of goods and services, even though you might not be into trading. You might be actually a B2C, because you are a consumer finally, and you are not trading or not into business as a B2B. but you must at least know what you are purchasing. Is that person even eligible to charge you? Is it even registered? Is it even a valid registered taxpayer or not? Or is he fooling us? And whatever is the goods that he is supplying, is that person actually eligible as per registration to supply? And if it is supplying those goods and services, is the right rate being charged to you? The rate is 12% for that goods, but this guy is charging you 18%. So we only saw the invoice, we didn't know whether 18 is chargeable or 12 is chargeable. It is our duty to see what is the correct rate of levy. Then there is a compensation cess for items such as, the sin goods, as we call them, which is, very, very high in certain cases. It can go up to 204%. Basically, the compensation cess is to compensate the states for revenue shortfall. And that's why on sin goods, this compensation cess is being there. Please remember, GST is calculated on taxable value or transaction value, which means when the taxable value is computed on that, 12%, 18% will be charged. And if that is a service that has been rendered and you have to charge TDS on that, you will charge the TDS on the taxable amount and not on the GST amount. Excluding the GST amount, whatever is the service transaction value is what you will charge as TDS, and not charge tax on tax. Sometimes I find people are charging TDS on the entire, deducting TDS on the entire invoice amount. No, you have to charge it on the taxable amount, because the vendor has shown for the service the taxable amount on which tax has to be GST can be TDS can be levied, and not on the total invoice amount, because he's shown the GST as separate. That you have to pay. You cannot deduct tax on that GST amount. So one needs to know, and I have talked about this word transaction value or taxable amount, and this you will find on your invoice. Generally, GST invoices will be based on, taxable amount plus GST, unless you are under composition scheme where there is no GST. So whatever is the amount will have to will fall under the purview of TDS. This is what is called as normal GST process and reverse charge mechanism. Okay, reverse charge process. We need to understand this before we go further. So normal treatment, normal payment and GST process, you can see this, now there is a receiver, there is a supplier. Okay, so the goods are, you can see the goods are services. The arrow is going to the receiver, and the payment is coming to the, the price of goods is coming to the this thing. Now, the GST in the case of normal forward mechanism, as it is also called, forward charge, normal charge, whatever, the GST amount will be paid by the supplier. He has raised the invoice for GST, and the supplier will get the amount of GST. Again, okay. So if you see, the receiver has given the GST to the supplier, and the supplier has given the GST amount to government. Now, this is what is called normal GST process, which applies to most of the goods. However, some goods and services are under reverse charge mechanism, which is also in short called RCM. Now, the RCM, the liability of paying the GST shifts from the supplier to the receiver, as you can see. The receiver is so the supplier on goods and services will only get the payment. The GST part of that invoice will be deposited by the receiver of the goods and services with government. That's what is called as reverse charge mechanism. Now, reverse charge mechanism applies to very few goods and services, specifically where most suppliers are unregistered, or there are some. I'm not saying that's the only thing, but we will see what that reverse charge mechanism is. So you must understand whether it is under forward or normal charge or under reverse charge mechanism. It will be mentioned on the invoice if it is under reverse charge, which means you are not supposed to pay the supplier is not supposed to deposit the GST. the receiver or the payer for those services is the one who is going to deposit it with the government. So please understand this, that I want to make you understand. I'm explaining to you the concepts, okay? And so that at least you understand the broad things. Coming now to the time and place of supply, very simply, the time of supply for goods and also for services is the earlier date which refers to issuing the invoice or receiving the payment. So whichever is the earlier date, issue of invoice or receipt of payment, whichever is earlier, under the reverse charge mechanism, there is something slightly different. Okay, it's the date of receipt of goods or the date of payment or the date immediately after 30 days from the date of issue of invoice for goods by the supplier, 60 days for services. So what I'm saying is, when is the time of supply considered for applicability of the tax or GST? The time of supply is at the normally at the time of invoicing, because that's the earlier of the date. Similarly for services, date of issue invoices or date of receipt of payment, whichever is earlier. So basically it means that whenever a transaction has occurred is the time of supply that is counted under GST. Now, as far as place of supply, I said in the first slide that the place of supply for GST is the destination, is the destination, because it's a destination based tax. Okay, it will not be at the origin state, it will be at the destination state, and that is the place of supply that will be considered for purposes of GST. So if the place of supply is the consuming state, then the state where it is gets consumed or final stage of destination is the place of supply and applicability of GST. Okay, the place where the goods are consumed, that state will have the right to collect the GST. The place where the delivery terminates or the goods and services get consumed or the services get consumed, okay, where the ownership is passed on, that is what is called the place of supply. Why is place of supply important? Because you that will decide whether it is an interstate sale or an intrastate sale. Okay. The other thing is for services, the place again is the registered dealer who's receiving the services. So the place of supply, if I am sitting here in Rajasthan or Jaipur for that matter, and then I'm making a supply to Delhi, the place of supply for my services is Delhi, because the person who's receiving it is the one who's where the ownership of this service is getting transferred. However, if I were doing it in Udaipur for an organization in Udaipur, then probably that will be an intrastate sale. Okay, that is what is important to know. Now there is a concept of input tax credit. So people who are registered under GST, and I this is what I call as the seamless flow of credit, and this is very important to understand. That's why it is called a truly value added tax. So at every previous stage, that tax that has been paid is available as a credit for set off in the next stage, is what is input tax credit. Whatever is the input tax that I have paid, can I take credit of that input tax at the next output stage, is what is input tax credit in a very simple way. So again, coming to the point that if I am a seller of a goods for say 1,000 rupees, and I had purchased the goods and paid tax, input tax is what it calls, or input in very short term. People will call it input. That's the same thing as input tax. And that 1,000 rupees I may have purchased for 1,000 rupees, I may have paid 18%. So I have paid 180 rupees when I got the invoice. I got the invoice, 1,000 rupees taxable amount, 18% GST, IGST, because it is interstate 180 rupees, I got that for 1180. If it was a service, and suppose it was more than 30,000, 50,000, whatever, then you will deduct the tax on that 1000, not on 1180. Now that 1000 may 1180 is something, 180 is something that is getting as a credit in your input, in your system, as your under your registration, just as we have TDS credits and transfer. This money is available for availing benefit or set off or credit at the time when we are going to make a sale. Then 1000 rupees, I made it 2000 rupees. Now 2000 rupees when I will sell, then I will charge 18%. I will have to pay, I will have to charge 360 rupees, and that 360 rupees I will have to deposit. But mind you, I will not deposit 360 rupees even if I get it from the from the buyer. I will deduct 180 rupees from that 360 rupees, because that is my input tax for which I can legitimately take credit. Okay. And therefore, I will deposit only 180 rupees, because it will be reduced from the GST payable, which is called as output tax. Okay. You have to fulfill certain conditions. These conditions are that the goods are B2B, used for business to business. Okay. Tax is, the invoice is there, the goods have been received, they appear in your returns. So the GSTR1 return is filed by the seller, it appears in your GSTR2B, and only then you can take credit of that. We will see what GSTR1 and 2B are and 3B are, just to understand the structure. But please understand what that structure I'm saying. So I've raised these invoices, but somewhere it will get reflected now. Somewhere I will have to report it now. Yes, I would report it through the returns that I will have to file. But there has to be a bona fide transaction, and that transaction has to get reflected on the GSTN. Then only I will be able to get this credit. Now, the time limit for availing ITC against an invoice is earlier of the following dates: 30th November of the next financial year, or till the time of filing my annual return under GST 9. So you have enough time for taking input. So suppose you got you purchase certain things and you have an input tax amount credit in your account. Will it disappear? No. Whenever in the next month, 2 months later, 3 months later, you're going to make a supply, that input tax can be taken, that particular input tax credit will be taken. Now, input tax credit in terms of, how do you take credit, is what is called cross utilization. Now, cross utilization means that you have IGST, you have CGST, and you have SGST. We have already seen that in the first slide where we saw GST means intrastate CGST and SGST, and interstate IGST. So based on purchases, sales, and everything, you will have input credit in all these three streams: IGST, CGST, and SGST. The CGST credit cannot be against SGST, and the SGST credit cannot be against CGST. So that cross utilization is not allowed. However, if you have IGST credit, then you can set it off against a IGST or CGST or SGST liability. So suppose you had money in your IGST, but you have a liability, or you had money in the CGST, but you have a liability under SGST, you will not be able to take credit because the cross utilization of the credit is not allowed. However, in case of IGST, it is perfectly allowed in that fashion. In terms of taking IGST, if IGST is not, liability is not there, then that credit can be taken to CGST and to SGST. So that seamless flow for credit adjustment is possible only with IGST. Okay? This is how the you can understand input tax credit, which I explained to you through an example. Now, this is a person. that in the peach color, that is the one who purchased these items. 100 rupees, 120 rupees, and 180 rupees is what he paid on the purchases of various goods. So what has he paid? He has paid 3,300 rupees as input, as tax, which is his input credit. Okay. Now these, the from ABC he purchased it, and he sold the goods on which the tax is 450 rupees. So he purchased goods on which he paid tax of 300 rupees. He sold goods on which he has to now pay output tax of 450 rupees. Will he pay 450 rupees? No, he will, on the output or the sale as it is called. That's why it is called output and input. That's the language that they use. And the output tax and the input tax is what they say. On the output, the person is going to only pay 150 rupees to the government, because the 300 rupees at each stage of the value add have already been paid to the government. So the 450 is not what will be paid on the output or on the invoices that he has raised. That is what is called input tax credit in very layman language. Now, as NGOs, since we are not registered under GST, whatever tax we pay on purchases, we will not get input, because one, we are a final consumer. It's not a B2B sale. We are a final consumer. So there is no input tax credit as far as an unregistered or an NGO which is not registered under GST. For this, for us, this 300 rupees is a cost. It is not a credit. That has to be understood. It's only if we were into the business, then this amount will be a credit which we can set off against our output liability. Now, and that is something that we will be able to see if we were a business. However, when we are a not for profit and not registered, we will not be able to see whether the seller from whom we have purchased, whether for our sale that seller has, for our purchase that seller has actually deposited or not possible, because we do not have that access. But otherwise, for a B2B transaction, it is easily possible, because both of them are registered and on the system and have the facility to see and correct any input or invoice incorrectness or wrong invoices that may have been raised. So, but we need to understand, you know, sometimes not for profits who are registered under GST, because they are doing some kind of incidental business, they can take credit of this input when they are not doing donor projects. But when they are doing donor projects and the entire amount of purchase is being debited to the donor, then that input credit should not be taken, because otherwise it will be a double dip. So you have to be careful if you are registered as an NGO, that when if or the donor contract will say that the tax or the VAT credit, as it is called, these foreign donors look at what they call it as VAT credit. If you take VAT credit, then you will charge us only you will book us expenditure only to the amount of the transaction value. So what NGOs do is, when they do donor projects, they will not take credit of the input. They will take credit of the input only for non-donor projects, where they can set off that input against the output liability. Understand? But if you do not have a registration as an NGO, then the entire tax is a cost to you, and you will have to report it at gross and charge it. There is no tax, VAT credit or an ITC available to you. Moving on to now the returns. I hope you are understanding what I'm trying to explain, and I'm trying to be as simple as possible. But you must, in your mind, now frame how GST is actually, working. You are you are not registered does not mean that you just don't need to know any of this. The ones that are registered will have an understanding of the ITC business that I am talking about. Now comes to the returns under GST. Now, again, if you're not registered, uh, you will not be able to, but it is for you to see whether the taxable, whether that person from whom you are buying is filing the returns or not. That can you see? Yes, you should see, because if it is not filing, if it's a defaulter as a vendor, you must ask him, why are you why is your GST registration suspended? And if it is suspended and you are not paying, or you are not, your filing history shows that you have not filed the returns, then why should I pay you tax unless you file your returns? Because if they have not filed the returns, they have not deposited the tax. So it is for us to be mindful that we go to the GST portal and see the filing history and whether the GST registration is active or not. Do you need login credentials? The answer is no. Do you need login credentials to know whether that vendor can deal in that taxable, in that particular product that he has so called sold to you? Again, you can see whether that taxable person in his registration is eligible, or is it covered under its registration for supply of that goods or services? Are its registration details in terms of offices and everything in order or not? Can you see that? Yes, the answer is yes. And therefore, you must search the taxpayer and the history. But if you do not know what the meaning of filing history is or filing is, then you will not. Now, coming back to returns, very simply, I am going to supply. So we have been talking about all about a seller and a buyer. Okay. Now, both of them are businessmen. Both of them, A and B, are businessmen. Now, A is the seller. So when it sells, it has to report the output, okay, or the invoices and the output tax. That output tax means that that A person, businessman, has to deposit, has to charge and deposit. That's what is called as output tax. Now the GSTR1 is the return which will make the seller liable to report what are the invoices that it has made, and what is the output tax that he has collected or is supposed to collect. This is what is reported in the GSTR return. All outward supply of goods and services. We are not talking of the buyer right now. Please remember, we are not talking of the buyer right now. But the buyer also is a seller of something. Okay. Right now, we are talking of the seller. The buyer could also be a seller, but right now I'm talking of the seller. So if you are a seller, you will have to file this GSTR1, reporting all outward supplies of goods and services, any credit, any rectification, any credit debit notes, all, in the subsequent months, there was some correction that had to be done, any credits, debits for returns, forget about that. But all the outward supply that you have made, okay, uh, for a particular period, for a particular reporting period, okay, for a particular month. Now, uh, any amendments that you had made because there was a correction, there was a wrong product that was sold, so the debit credit notes and the returns that had to be made, that also will come in your GSTR1. But primarily for us to understand, all sales that I made, I will have to report it on the portal. That is because of the registration reporting requirement. Now, what is the reporting requirement? It's the for all sales that I made, I have to report by 11th of every month. Now there are two types of registered taxpayers. One is what is called as a regular taxpayer, and one is what is called as QRMP taxpayer. So quarterly return monthly payment, that is what it means. So this person has to file the return quarterly, but payment of tax has to be made monthly. So please remember, the liability to pay tax is monthly. Whatever sales you have made, you have to make the payment every month of GST outward supplies, but you can report on a quarterly basis because you have opted for quarterly payment QRMP, uh, because your turnover is not more than 5 crores, okay, during the year or in the previous financial year. So if you have an annual aggregate turnover of 5 crores, uh, or even if you don't have 5 crores but you have not opted, you have to opt for QRMP, then also you have 2 crores of turnover but you have not opted for QRMP, again 11th. So by 11th of every month for the previous reporting month, you will have to submit all outward supplies and all corrections in this GSTR1. If it is QRMP, then 13th of the month following the end of the quarter. Those are the dates. The dates are important because the dates will then decide how much credit will come and how much net payment has to be made, because there has to be a deadline. It cannot happen like this that any day I report and any day I can pay. There is to be a reporting cutoff period. So for the so we what do we understand? Whatever invoices or sales are made are reported in GSTR1. Whatever is the input, whatever is the input, now I am a buyer. Now I am a buyer. So I am a seller. I have to decide. Now same person has become a buyer. So whatever I have purchased, I will keep on seeing in GSTR 2A and 2B. Now 2A is a dynamic return. So as I keep purchasing, I will keep on seeing because it's a dynamic return. Dynamic means it will keep changing over a period of time. As I am buying, I will be able to see how much tax I have paid, because when I am a buyer, I'm paying GST. Now this 2A is actually only a view only. 2A and 2B are both view only, but there is a difference between 2A and 2B. 2A is dynamic. It will keep changing every time. But 2B is static, because then with that return of 2B, your ability to take credit of input will get frozen. But your 2A will keep on changing from day to day. And therefore, it's not that important, but you can see how much is the tax that I have paid. Now, under QRMP also, so it's not necessary that you if you are under QRMP, you can do the invoice furnishing facility, and still the credit can be seen by the purchaser under IFF. If the IFF is not used, then only for the QRMP fellow, the the purchaser will be able to see only at the end when the QRMP is taxpayer has filed his GSTR1. Then you'll have to wait for a quarter unless the QRMP person is utilizing the IFF facility. Now, what I'm saying is that as a buyer, this 2A return gives you indication of how much is your input. So input output is what is important. Why is input output required? Chalo, anyway, we will see that. So we are now talking of input. Now this is a return. This is only read only return. No action can be taken, but it helps. This return helps you to decide how much is your input credit, how much is the input tax that is being paid. Now coming to 2B, this is a static return. This static return means कि जब आपने 11th on 11th you have filed your return, on 14th this return will get frozen, and this return will then say this is the amount of input which you can take credit when you have to make your net payment. So suppose 100 rupees was my output tax, okay, and I filed the GSTR1, and 2B becomes available to me on 14th. It's mentioned here for the between the two reporting periods after filing of GSTR1. That is why, because once the GSTR1 has been filed, only then in 2A you will see the input, and in 2B on 14th your input will be frozen, which means that against 100 rupees, whatever you purchased, you got 80 rupees as your input. Now your liability to pay was 100 rupees and you have got 80 rupees as input, and that reporting period gets closed. Okay, very simple. So I'm not reading out any other thing. There is this invoice management system. So there is a possibility where the buyer, if he finds any fault, just for your information, can reject that and say, well, this invoice is not correct. Please correct it to the seller. That facility is there. That's called the IMS. So the 2B also provides an action to be taken. While you cannot do anything much, but that is a the 2A is a read only, but 2B can gives you action points in terms of rejecting or accepting. And the IMS now has that facility where you have to accept so that there is no confusion later on. Now, to that point, we have come. 100 rupees was my GSTR one liability, and 80 rupees is what I'm able to get as credit was on 14th. Now comes the net liability period. That's the GSTR 3B. So 100 rupees I had to pay, 80 rupees I got credit, which is now showing in my 2B. So I have to pay 20 rupees as my net liability of GSTR through GST through the challan. This buying and purchasing, the selling and purchasing is now getting combined into one return, which is called the 3B return. So the 3B is a declaration for furnishing the details of all outward supplies, input tax credit, and the tax liability. How much is my tax liability, net tax liability that I have to pay? Outward supply, I had output liability. 2B, I had input credit, benefit, privilege I had. And the difference between the output tax and the input tax credit is my tax liability for this period. And that will be reported in GSTR 3B. Now there is a due deadline for GSTR 3B, which is 20th for normal taxpayers, and for QRMP it is 22nd and 23rd for two categories of state X and Y. There are two categories that have been made, just like we saw the 20 lakhs, 40 lakhs, 10 lakhs, 20 lakhs, normal and special category. Here also. So if you have opted for QRMP, again, it's on a quarterly basis, the 3B. And that is when you will, if you don't opt for the IFF, if you have not given the IFF, it's when the input tax credit will be possible for a QRMP supplier. But for a normal supplier, this will be available on the 14th, and your net tax liability has to be paid along with 3B on 20th of every month. This is what the reporting formats, this is what the reporting returns are. I will just share other returns which very quickly, but these are the three returns that are critical to running the GST show. The GST show is based on 1, 2B, and 3B returns. So people who work on GST will be able to understand. But those who don't work must also understand how this entire thing is working. And at the back end, this credit is getting also transferred electronically to the center and the state governments. So that gets settled seamlessly. Okay, and this particular thing, your ledgers get adjusted accordingly on the GST network. Your net liability gets captured and your payment liability gets captured, and your actual payments get captured, so that the transactions are all closed for that reporting period. That is the beauty of GST. Now there is GSTR 7, which is basically for autonomous, where they have to deduct TDS. I'm not reading this. 9 is basically the annual return. So just as you have your annual ITR or your annual FC4, similarly ITR 7, GSTR 9, which is basically if your turnover exceeds rupees 2 crores, it's mandatory and it's due by the 31st of December. It's also important from the point of view of ITC credit, as I had mentioned. Okay, so it contains the entire story for that particular financial year. Okay, uh, all the months, all quarters, everything. So basically, it's a consolidated report for that particular taxable entity or for that dealer for the entire year. GSTR 10 is for surrender or uh, registration has been cancelled or surrendered. Forget about it. Now we come to GST under RCM. Please remember, after I have done this, I would request you tomorrow to please have a look at this. Uh, People who are into NGOs may not understand, but it is very important to understand at least these basic concepts of GST. Okay, because this is important for us. Reverse charge means that the liability for payment of GST, as I had shown in that diagram, actually is on the seller, on the buyer, okay, on the recipient instead of the supplier. Now, the goods and services are notified under reverse charge mechanism. Goods including agricultural produce, supply from unregistered suppliers, goods transport agencies, legal services. In certain cases, legal services that you might avail might entail that the GST has to be deposited by you. In that case, you will, or rentals, the GST has to be deposited by you. So please understand what are the services under RCM and the responsibility, since it is for the person who's receiving it, the registration under RCM will have to be obtained by that person, and that person will have to deposit that uh, GST through cash. There is no benefit of ITC under RCM. Okay. Uh, and on the tax invoice, the word payment GST on reverse charge mechanism has to be put. So it's important for us to understand what are the services that we are availing and are they under RCM. If they are, then we have to deposit that GST. Coming to composition scheme, so there are so why do we need to understand composition scheme? Sometimes we get invoices where on the top it is mentioned under composition scheme, and there is no GST that has been charged. And suddenly we start talking to the vendor, why have you not charged GST? Because we don't know what it is. So if it is under composition scheme, there will be no levy of GST. And if there is a standard product, and since we are not availing input tax credit as an NGO, and suppose a regular taxpayer is supplying, say, a computer to you for 1000 rupees and charging GST, whatever is the GST applicable on that, and there is a composition scheme supplier which is charging this for the same computer 1000 rupees or 1050 rupees, and this fellow is charging 1000 plus 18% for the same standard product, and since we are not claiming any input tax, then it will be better for the standard product to be purchased from a composition dealer, because net the total for us, the taxable amount plus GST is the total cost. So wherever the total cost is less is should be beneficial for us, because we have no credit input tax credit availment possibility. So all the taxable all the invoice value is uh, the cost to us. So when you are going to the market, you may prefer for a standard product which is the same sold by this person or that person. You may prefer a composition scheme supplier rather than a regular supplier if the total cost is less. That is what I'm saying. So if the turnover is less than 1.5 crores for goods in the previous year, or even for services, composition scheme is applicable now. Then if it's less than 50 lakhs, then you can pay a fixed rate of GST to the government. Okay. And uh, for the turnover for intrastate sale. Okay, this is applicable for intrastate supply. The no ITC will be payable to the composition because he's not charging any GST. This is a lump sum amount that is charged. Now, no GST is charged on the invoice. It's issued marked as under composition scheme, and the rate of concessional GST under composition scheme for on the dealer as a one-time amount has been mentioned, has been stated. 1% for manufacturer and traders, 5% for restaurants not serving alcohol, and 6% for service provider. So I may have a service provider who is charging composition scheme, may he is paying 6%, and another who's charging 18%. So between the two, if the services are the same, you might want to look at the composition scheme supplier, because at the end of the day, that's a cheaper one. So the GST is paid on quarterly basis by the component supplier, composition supplier, and the GSTR 4 is the annual return to be filed by 30th April. So these are filing and the GST deposit requirements that are there. All right. So this is something that I just want to mention. Uh, this is only for small dealers, just to ensure that there is no hassle in terms of that 1 2B, 1 2A, 2B, and 3B, and other reporting requirements and payment requirements. That is what is the composition scheme. Moving on to the HSN and SAC code. Now, this is the most important thing for us. Why? Because I want to tell you this HSN code is important. When you are purchasing goods, then please see the HSN code. The HSN stands for Harmonized System of Nomenclature for classifying goods. So the goods are classified as HSN. These are the code that is used. The HSN has 8 digits and SSC has 6 digits. Okay, so in some cases the first 4 digits might be used. In some cases the next two, and some cases the next two, depending on turnover for the 8 digits. But the first 4 digits will be the more specific to that particular HSN code. Similarly, for services, you have the service accounting code. So if you're buying services, then you have the SAC code. Now the HSN code will define what that goods is, and the SAC code will define what that service is. Okay, and also define what the rate of GST is for that HSN or for that SAC. Is it necessary for you to see what is the code? That is, and what the code is mentioned in the invoice is the correct code, and the rate of levy that has been put there, which you are paying as a cost because you are not getting a credit, is something that you are paying rightfully or not. Wherever there is a confusion, you can put it on net and see what the HSN code is. But it's also important that the dealer is dealing in that HSN or SAC, and whether that person is dealing in that HSN or SAC is something that you have to see by going to the GST portal. All right, this is very, very important. So for us to understand the HSN code and match the HSN code with the goods that we have actually purchased. Similarly, for SAC, for this against the services that we have actually purchased and have we paid. Suppose this fellow puts an HSN code which has 18%, which is, whereas the product that he has supplied actually has an HSN code with 12%. He's actually charging you 6% unnecessarily, and he knows that you as an NGO you will not be able to see whether first you will not be able to take credit. So second thing is that you will not be able to see exactly on the portal your particular transaction. Whereas if you were registered, definitely in 2A and 2B, you can see the invoice that has been raised and has the input been transferred, or that credit has been given to you, that you will not be able to see. So when it comes to NGOs, it's very important for them to see the HSN code is right and for that product, and the rate is right for that particular HSN code. And that is what is actually, because the GST is a cost for us. Moving on to the last concept of e-way bill and e-invoice, just for you to understand. When any goods are supplied where the value of the goods through a vehicle, okay, The value of the goods is 50,000 as a single invoice, then a e-way bill, which means for the transport of that goods to happen, there is to be a proof. So the on the on the portal, on the GS e-way bill, on the portal, you will have the e-way bill will have to be generated. So the e-way bill portal that is mentioned here, e-way bill gst.gov.in. If any supplier is supplying goods more than 50,000 through a vehicle, then that particular e-way bill will have to accompany the invoice, just to see that the goods had actually traveled to the destination or not. And therefore the e-way bill will have to be generated. It has two parts, part A and part B. Part A has to be generated by the supplier, details of goods, while part B can be generated either by the supplier or by the transporter. Okay. So this part A and part B will get reported on the e-way bill portal. A e-way bill number e-bin will be given, and that will be on the e-way bill. So when such a product or goods more than 50,000 are received by you as a not-for-profit, please see whether an e-way bill is accompanying the invoice or not. That is what is the important thing. Uh, Now, e-invoice is another thing that you need to know. You will get an invoice, but the e-invoice says that if the turnover of a dealer is more than 5 crores, then all the invoices that are generated will also have to be filed or reported in the e-invoice section of the GST portal. Just for your information. Now, what you need to know is to check the taxpayer to the search taxpayer tab on GST portal. Now, this is without login. So you can search the PAN by PAN or you can search by GSTN. Okay. It provides details of whether the taxpayer is active, what goods and services it deals with, and also the filing history. Filing history is very important because then it shows whether it is compliant or not. And if the filing history is in default or the status is not active, you must not pay the GST component until the vendor or the dealer is active again. Okay, you must say you have to be active, only then I will pay. That is something that you should take up. Then you must check the HSN code and the SAC code on the GST portal, or you can check this from Clear Tax or wherever the HSN code. It's available also on online. So the two things that you need to do is to see the HSN and the SAC for whatever goods and services and the rate that you are paying. And the second thing is the taxpayer status through the search taxpayer tab on GST portal. Uh, I don't know whether I can show you. This ends my presentation. One minute, let me see if I can show you. Okay, so this is the GST portal, and here is the search taxpayer. Now you need login credentials. You don't need any login credentials at this stage. I've just typed GST portal, and this is what it shows. So what I'm actually trying to tell you is, now when you have services is where you actually have payments and registrations and returns and refunds and e-way bill system. That's where you can see, and you have the e-invoicing system here. Okay, as I just said, the e-invoicing system is here where turnover is more. The invoices have also to be fed in the e-invoice side, but this is what is the the real thing for us. Now, if you want to search a taxpayer who has given you an invoice, you can search it by PAN or you can search it by GSTN. So you can say I want to search by GSTN. Okay, and you'll have to feed the GST in this. Let me find if I can get my GST and help you with just seeing. Sorry, I didn't mean to actually have this show this to you, but why I'm trying to show this is just to help you to understand. Just hang on. ETFs. I think you can see this. So I have tried to search the taxpayer through the tax search by GSTN, and we have got into this. Now this is my firm. Now these are it's a regular taxpayer. Okay, and is it has the Aadhaar been authenticated? Yes. Whether KYC is applicable? No. Is the GST is the GST active or not? This is very important. What is it? Where is its office? What are the products in which it deals? All this is there. Then you can see show filing table or show filing frequency. So show filing table, you can search for 2526. No, because I am a QRMP fellow. So I don't have any results. Now, when it comes to 2425, this is the filing history. Now, since I am under QRMP, I will file my GSTR1 four times because I'm under QRMP. Then I'll have to file it on June, September, December, and March. Have I filed or not filed? If I were not in QRMP, then I'll have to file it every month. Similarly for GSTR 3B. Now, once my period is over for uh, uh, June, then I will have to file it by 22nd or 24th, as the case may be. The GSTR 1, of course, by 13th, and the GSTR 3B by 22nd or 24th, and it will then populate here, which means that I can see the filing history of this particular vendor from whom I have purchased a service, just to say that they are up to date in terms of their filing, which means they have paid the tax, they have filed, they are active, their HSN code is matching with whatever I am doing. This is something that I will always want everybody to see. Okay. Then you can also see the HSN code. Okay. So you can see, I think they are search taxpayer. I don't know where the GST is. You can see the HSN code from on also without having to log in. Okay. So what I'm actually trying to say is that these are the two things that you must see from uh, while you are making any. If very small payments, then it's all right. But if it's a composition taxpayer, also you can see. Okay, search taxpayer opted by uh, uh, opt in out opt out is what is that is what is mentioned here. So you can see whether it's a regular or a composition taxpayer. You can also see their current status of compliance. So I'm stopping the share of part of it. All right, so I think I'm done with the presentation. I just wanted to show you broadly what this is in terms of the portal without having to log in. But two things is what I will always want, two, three things is what I will always want you to see is when you are buying from a dealer, is the dealer a genuine dealer, an active dealer, deals in that product, is charging the right rate, you can check, and also is it compliant as far as GST is concerned or not. Otherwise, you can definitely take up the matter because you are not under IT input tax, you are not registered. This is the extent to which you can validate or verify whatever can be verified about that taxpayer. I have seen a lot of, so we cannot do the portal as such, but broadly is something that I am trying to share. Otherwise, we can do with login. We can see GSTR 1, 2A, 2B, and 3B, and the other returns, and what are the tables in the GSTR 1. I don't think you need to know at this stage that much, but But what you need to know is this, something that I have kind of told you. With that, I close my the session. But now I'm going to take these questions that are there on chat, and then we can take other questions. If an NGO does not have GST registration, consultant in that organization also did not register, but GST applicable for the consulting amount received from that NGO which exceeds through services 20 lakhs per annum. Now onus is on that NGO to collect GST invoice from the consultant. Gopi, I can't understand this question. Can you unmute and ask that question?
Hello.
Gopi, can you let me? Yeah, Gopi,
Yeah.
can you tell me what the question is?
Is it audible, sir?
Yeah, yeah, yeah. Go ahead. Please go ahead with the question straight.
Yeah. No. Basically, what I meant, an NGO does not have a, GST registration, and the consultant from that NGO has the as threshold limit of 20 lakhs above. He has to register his GST for that, because the consultancy paid from that NGO crosses 25 lakhs, say. So in
So,
that
Gopi, why?
scenario, uh,
Gopi, first of all, your NGO is not registered. You have a consultant who is supposed to register if the services cross 20 lakhs. So
yeah, correct,
the onus is of registration is on the consultant.
correct.
Okay. Now what is now go ahead.
What, and the next question is like, when he see, since that NGO is paying 20 lakhs above, is it necessary that NGO has to ask that consultant to give a GST invoice? That was my question.
So the onus, if the consultant is not giving you a GST invoice, the
Ah,
onus is actually on the consultant. The consultant is the one who will have to finally bear the brunt of GST payment once he's caught. So if
correct.
you as the payer
Ah,
is not responsible for asking him to get registered or not, the onus of registration is on that person to
okay.
become a dealer once the taxable services cross
Okay.
the threshold of 20 lakhs. It is for him. If he does not charge you GST, you have no problem.
Okay. Thank you, sir. Yeah.
The question, another question is from you only. Is it mandate to have GST registration? Yeah, or if there are services under RCM for which you have received, you will have to register under GST under RCM. Not
Mhm.
regular registration, but registration under RCM, yes.
Okay. Okay. Okay, sir. Thank you, sir.
If there are any questions, you can unmute and ask those questions. Any questions you have or on the WhatsApp. I have tried to explain this law to you in the easiest fashion, but the framework will settle only once you reread the presentation and also hear the recording. I think then it will be much clearer. I am not wanting you to be an expert on GST, but I want you to be able to at least understand the architecture or framework. And when you deal with taxable dealers or dealers who are, GST, charging GST, what is it that you need to take precaution in order not to get cheated? Is what the takeaway of this particular session is. And of course, the first and foremost was applicability of GST on NGO is the critical thing that you need to always ascertain in terms of, is it applicable to you or not? Is that something that you need to understand? If there are any questions, please ask. Otherwise, we can wrap it up. My intention is to help you to understand GST and to understand when is it that registration for you will get triggered. This is very important. So when is registration going to get applicable to you is important. And when you buy goods and services, what do you need to know and understand and check before making payment and not getting cheated? That's the idea. So we see you on 13th, but before that on 11th, if you join, please join the session. uh, the Rohini Nilekani Philanthropies or the PATIC is going to send out an invite for the There's so many calls. For the session on 11th, it's a 1.5 hour session. Please attend that. It'll be very helpful for you. And on 13th, we'll have an orientation on PATIC and the compliance calendar that will close our session, our course, and our 2 months journey together without break. Thanks for your participation and see you on 13th, which is our last session. Thank you very much, all of you.